Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring. Today is Wednesday, June 12th, 2024. Hey, I hope you're doing well. I hope you're having a good day. I had a great short trade today on TLT on the 5-minute in a bearish fair value gap that I wanted to share with you today. Hopefully it will be helpful and you can kind of learn about fair value gaps and what they are. But take a look at this large down bar here. This was after the Fed meeting today with Jerome Powell, and bonds responded. We had rallied prior to that, and then when the news on from the FMLC meeting came out today, we had move up and then a dramatic move down that broke all sorts of pivot points to the downside, and it left what is called a fair value gap, and this is in the highlighted red area here. Fair value gap consists of 3 bars. This bar is bar 1, bar 2, bar 3, and the bar that broke structure to the downside broke structure here, broke structure over this pivot point as well. It left a gap between the bottom of bar 1 and the top of bar 3. So all the price action that happened, there was no testing of the area between the low of bar 1 and the high of bar 3. So the market likes to tend to go back in and test these. And so when we broke the structure, as often happens when you have a big move down, we have a reversal back up. And the bar that I got short here was when we went into this fair value gap and then we closed below it. So I did get short here, 93.24, with the rejection of the red fair value gap, and also the rejection of the halfway of this big bar. Oftentimes when you have big down bars like this, you'll rally to about halfway, and then that's where you will fail. So that's the reason I decided to place the trade, was because of the red fair value gap, and also with the rejection of the fair value gap, and also the rejection of the halfway. So I got short here at 93.24. Now, as soon as I go short or long, I always want to place my initial stop first. Well, that was just the top of this swing high here at 93.35. That's my end of bar stop. So when I went short here, had we closed up above that, that would have been the end of the trade for me. So that's my end of bar stop. Now I also have an emergency stop, which is 2 ATRs above my entry. So this is exactly, here's my entry, 93.24. I place the emergency stop 2 ATRs above. So always 2 stops: end of bar stop, emergency stop. Now, as far as profit goes, my maximum allowed loss here is 2 ATRs to the upside. So I want to have an asymmetrical risk to reward ratio to the downside. So I place my profit target double my emergency stop, which is 2 ATRs. I placed it 4 ATRs to the downside, so that if I'm right, I'm going to be right twice as much as the worst possible scenario of my 2 ATR. And you can see it was a really nice, easy trade, shorted at 93.24. And then here on this bar, I had my profit target in to exit at 92.63. So it was a nice, easy trade that immediately went my way, and for a profit of about 55 cents to the downside, and it went a little bit lower than that. Anyway, good example of a bearish fair value gap. If you found this helpful, I would appreciate it if you could hit the thumbs up button. It really does help out the channel, lets YouTube know there's some valuable content. If you would like to learn more about my trading and my trading strategies, I have a podcast on the weekends on YouTube called the Gossett Trading and Mentoring Weekend Review. I go through and I show you all the trades that I made last week, both on the daily time frames, the weekly time frames, when I entered the trade, why I entered the trade, what the setup was, what the strategy was, and then most importantly, how I am going to manage the trade going forward. And once we do that, then I also talk about the potential trades that I'm going to make for the upcoming week. But I think you'll find it helpful. And if you have some time, check out the podcast on the weekend. But thanks a lot, everybody, for being here. Hope you're having a good day. And we'll talk to you tomorrow, hopefully. Take care. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.